The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome back to another episode of the Canadian Mortgage Show. I'm Alex Shanks, here with my co-host Alex Pang. I can see you got a little bit of a different background here today. You got some hockey players up in the back. It looks like you're in a different area. How's it going today?
Yeah, it's good. I bought these artwork before the start of our pod and didn't realize I've gotten used to Amazon, so getting things instant, but it's taken 2 or 3 weeks to finally get. Had it up yesterday. I'm glad I have it. So this is my favorite Canuck of all time, Pavel Bure, and my current favorite Canuck when he was Norris Trophy winner. But Alex, you look great. Fresh haircut. And
yeah,
let's cheer everyone. Brand new mic that just arrived hours before the recording of this pod. So
I said it was meant to be in yesterday. This is why I don't order Amazon on the island. I don't go by the dates. It was meant to be here yesterday. It got in here. It said it wasn't going to be here till 10. We got it earlier. We're good to go.
We now have a professional production, folks. So we got a lot on tap today. Alex, you want to get started?
Yeah, let's talk about what happens. Why are rates going to be coming down and potentially faster than we thought? What happens when unemployment is hitting high numbers? It means our economy is not doing good. And we got unemployment in August at 6.6.
Yeah, there's little surprise since we have the fastest population growth in the world, and our per capita GDP has been flat or negative for at least 5 or 6 consecutive quarters. Now, we mentioned this in the last episode, but youth unemployment hit a new high at 14.5%. We know that's a direct correlation with mass immigration and low-wage temporary foreign workers. And there's little evidence of widespread layoffs because other than a few tech companies or a tech industry, maybe earlier this year having some layoffs, but I haven't heard of any mass layoffs happening. Have you, Alex?
Not really. Some of the banks, like a few of the banks, even here in BC, like some credit unions, they let go about 300 to 400 people. But other than that, we're propping up our GDP with the immigration. That is what the government is using right now to say, hey, don't worry, the economy's doing good. The economy's doing good. Where if you stripped all that out, we're not doing good.
No, not at all. Another industry I was thinking of that did see a lot of layoffs is the telecom. We're big sports guys, so we see a lot of layoffs between Sportsnet, TSN, and all those. And these sports radio shows that we know and love, because they're governed by Toronto, they're all being shut down. So you're starting to see a lot of slew of hosts go on podcasts, the local route, right? Not governed by Big Brother back east. So
CBC, not getting all the funding from CBC.
The one show I actually watched on CBC was Schitt's Creek, and it turned out to be an amazing show. Have you ever watched that show?
Oh yeah, it's such a good show.
Yeah, that show is hilarious. Actually, funny enough, I actually didn't watch it while it was on CBC because I'm like, okay, how good is it? It's on CBC.
Yeah.
But when it cleaned up in the Emmys near the end, my wife and I thought, oh, we better pay attention to this. So it ends up being a great show. So a little sidetrack there.
Some good things can come from CBC. We'll give them one win.
Yes, absolutely. But yeah, with the unemployment hitting 6.6, there's pretty much no doubt Bank of Canada is going to continue lowering rates. But many are actually calling for more. There's like a 40% odds of a 50 basis point rate cut. What do you think about that, Alex?
I'm going to lean more of, I personally believe for sure in October, we got another 0.25. December, we have another 0.25. I just don't know that they're going to do a 0.5% right now. Again, if we get inflation data coming down lower, more unemployment, maybe they spur it. But I think they do need to baby step a little bit. We know when they increase the rates super fast, that was not a good idea. And so how are they going to watch it on the way down?
The only times that they made 50 basis point cuts was during the peak of the pandemic when it first rolled in, where everyone was scared. We didn't know what it was about. We needed to just stay home, stay safe. Are we in that period right now? I don't think so. We're starting to see
Yeah.
cracks because we've all heard that it takes 18 to 24 months for rate increases to finally show up in our everyday lives. And it looks like it's finally happening. The cracks are showing now.
Oh, exactly. It's seeing people that talking with a few people that have mortgages that are coming up for renewal. And it's, are they going to be able to afford those payments? What's going to happen when that? And that's where people are going to have to start fire sailing. And for people to qualify, we need lower rates. It's our prices of homes. We've been in this for almost 2.5 years. The 50% drop that people said was going to happen, it's not happening. I think like in the Vancouver market, what's like the largest drop? I think like Abbotsford area is like 10-15%.
Yeah, typically the areas that seen the biggest increase are the outskirts. Now we're in Vancouver, it's the Fraser Valley, would be Abbotsford, Chilliwack, Surrey. I live in Surrey, but we did see increase as well. Now you're looking at the GTA on the outskirts. Correct me if I'm wrong. I don't know GTA that well, but would it be like Markham, Scarborough, like
Yeah,
just
GTA is definitely worse off. Like they for sure are
yeah.
in. They're. I would say BC's bad, but Ontario's in. I think like an emergency state here soon.
They're going to be in a world of hurt. That's for sure. So what we've seen is the ones that increase the most were all the cottages and all the rural properties out in the outskirts. And now that all the companies are calling everyone back to work in the downtown core, this $2 million
People have
property out in the burbs it's
not
not
worth
worth
it.
it. It was not worth it at the time. So it's going to see the largest decrease for sure.
Yeah, and that's talking about people going back to work. Even the like government employees, they've been told, "Hey, you're gonna have to start coming back to work 3 days a week." And I've heard some like the people are upset, and it's you got to go to work 3 days a week in the office. Is it really that bad? It's just kind of funny hearing people the things that people can complain about.
I see those videos of government employees protesting and I just laugh. I'm like, are you kidding me? You have like new things for people to complain about where some people there is no work from home option. You have to be in the
Oh,
office or wherever you're working, especially tradespeople. You have to be a job site. There is no work from home for trades. So there's no public sympathy for government employees who complain about that. I'm
oh
like, man, you guys
no,
have it good.
other people having to
TFU.
work. Other people having to work 2-3 jobs just to get by, and it's yeah it I understand when you have a family. Like I got kids at home, like I'm lucky enough that both me and my wife are self-employed. I don't know exactly how people that don't have those type of jobs have kids and both have a job. It's very hard, and so I
Mm-hmm.
understand wanting to be home because you also need to watch your kids, but it's also okay, it is a job and you got to be there for it.
I think people got really used to the work from home lifestyle that
Yeah,
we had during COVID, and they think it was going to last forever. Now, our lives have changed forever for sure, where this rise of TikTok, of Zoom, but people do miss face to face conversations, face to face lunches, meeting up for coffee and all that stuff. Zoom was important because we had no other choice during lockdown and during a pandemic. But now that life has returned to normal, people miss the face to face connection. So
totally.
I have no sympathy for those government employees who are have to go back. Like boohoo.
Yeah. Should we talk about some of the other things that happen? We obviously have the unemployment, but what's going on with the government? What's
Oh
happening and what's
yes.
some of the changes we got there?
Speaking of government, there is so much things going on with the government right now. It's honestly a gong show. First thing that we have is Jagmeet Singh, leader of the NDP. He officially ends the coalition with the Liberals. What does this mean? We don't know.
I feel
Now,
like it
Pierre
means
Polyev.
nothing right now. I feel like
Yeah,
there was this
exactly.
big thing of, oh my God, it's going to change everything. And I'm still going to be there with you. Just, I don't agree with your one thing right now.
Yeah,
To me,
exactly.
it seems like a smokescreen trying to appease the NDP people.
It seems like the NDP realizes that the Liberals are a sinking ship. And so they're trying to distance themselves and trying to improve their optics for maybe they're just trying to save face or salvage whatever kind of support that they have. Now, Pierre Polyev, leader of the Conservative Party, He accused Singh of trying to hang on to his pension, because when it comes to being in government, you need to be serving at least 6 years before your pension kicks in. Now, Trudeau and Polyev already have it, and they qualify, but he's accusing Singh of hanging on till, I believe it's early next year is when his 6 years kick in, when his pension kicks in. So we don't believe in bullying, but Pierre Polyev calls Jagmeet sellout Singh. And you could hear that all over, because it seems like, I'm sorry to say it, it seems like that's, I don't know if it's accurate. Like, we don't encourage bullying, but that seems to be the case with Jagmeet.
I just feel like the NDP, especially in BC, it's had such a strong foothold. Like, it's been here for the union, it's been here for the people. On the federal level, I just feel like it's just a bystander. It's really just been the one that helps either the Liberals or helps the Conservative. It's why are we actually, what are you doing here for us right now? It really, and could we be in a different place if they wouldn't have got into bed together when they did the snap election 2 years ago? Like, there's so many different things. And right now it does not look good for the Liberals. There's all signs point to, could we even see a new election coming out right now, sooner than later?
Yeah, so I actually heard this today. Now, by the time this recording gets live, this is probably old news, but I read today that the NDP, Singh has been actually flip-flopping what to do. But I heard today he's actually now planning to oppose the carbon tax, which could trigger an election this fall. Now, Pierre has been clamoring for a dissolve of government next time they meet. I believe they meet in the next couple of weeks. But it's coming up on my feed a lot. Yeah, that's what I'm noticing. Now, because politics, people are very opportunistic. Now, the Bloc Québécois, because they see Singh dissolve their agreement with the Liberals, Bloc Québécois saw this as an opportunity, and they quickly made an offer to the Liberals in exchange for their support. Now, we don't know what the whole support is, and there's a list of demands, but the main thing is for federal taxpayer money to go to Quebec. So right now we know that Quebec pretty much is its own sovereign province, or they don't want anything to do with us. When it comes to any contests, anything, lottery, it's always no purchase necessary. Everyone qualifies except for Quebec. We don't know. They're being opportunistic right now. I don't know if it'll fly, but there's a whole lot of other things going on, Alex, in the government.
Yeah, and people are leaving the Liberal government. And are they jumping ship, or are they just getting off that boat right now? There's a lot of internal struggles, I think. Like, for one, we heard the talk of, is JT trying to separate himself from Christina Freeland? Does he believe that she's doing a good job? And they went and hired someone else that I personally believe had done a good job in the past. They went and hired back Micah Carney to get him to come actually probably try and help right the ship. I think they're grasping at straws now.
Yeah. So Mark Carney, he was a former governor of the Bank of Canada back in 2008 to 2013. He's also a former Bank of England governor. Yeah, he comes on as a special advisor. Now, there's a few other things that we've noticed. The Liberals, you can tell that they are just desperate. So a couple of ministers, Minister of Health Mark Holland and the Minister of Foreign Affairs Melanie Joly, they're saying Canadians don't want an election, that they are happy with the Liberals, or they want the Liberals to govern them. What kind of Kool-Aid are you drinking?
You're only getting, I've never got a call saying, hey, are you happy with the government? They say that they do all these like polling and they get these questions. I have never been asked like, hey, are you happy with what's currently going on in the government? Do you have any questions? I would like to know where do these surveys come from and who's answering them?
I believe we mentioned it on a previous episode, but there was a poll that ran around that Justin Trudeau has been deemed the worst prime minister in Canadian history. Did you see that?
I haven't seen it, but it's a hard one.
I think it was like 70% believe that Trudeau is the worst prime minister.
And yeah, we don't want to get too political party here. Everyone knows, everyone has their own decision. I personally don't like him just as a person is the main thing. He had to come into a lot of crap with COVID. Everyone like that way, but just the way that he talks to everyone and the way that he's done things is just, it could have been managed so much better. He won the votes by bringing marijuana legal. That's how we got the votes.
Now, what we're like, for the most part, when we criticize the government, we're not trying to criticize our ministers as people. They're good people. They work hard ish, but we just don't agree with their policies. Like the last 9 years of the Liberal.
I just don't think they're listening to. Yeah. I just don't think they're listening to what.
Go ahead.
I was just going to say, I just don't think they're listening to their people. I feel like they're drinking some sort of Kool-Aid and think everyone's happy, but there's a lot of unrest. There's a lot of stuff that people are not happy with. And that's even on people that have been liberal for the last 50 years. They're unhappy. And that's like there's change that needs to happen.
Yeah. So we're not trying to tell you who to vote or whatever, but I'm pretty sure the country is tired of the Liberal government. We're going to see a change of government when the election happens this year or next year. I call it as I see it. It's just the temperature of what we're seeing.
What's your thoughts on that, though? Because that's exactly what happened with Stephen Harper. Everyone was just like, I'm done with them. And that was like, it just seems, I don't know. I just feel like we're in this like historical cycle of, oh, they're in power. They're not in power. Let's see some change. I'm really hoping that we get someone that's actually going to listen to the people and do what they say, not give us the sugarcoating of all these things.
Yeah. We know with politics, it really is. It's almost, do people want to vote for Pierre or they just don't want Trudeau back? There's two sides of it.
Yeah.
Another thing, talking about the Liberal government going down in flames here, 5 chief of staff has resigned from the government. So even just think of like the Titanic, it's sinking and people are just trying to cut bait.
They're just
save yourself.
They're going to throw everything out there. I don't know if anyone heard like when Justin Trudeau talked about how he's going to help housing. He said, we're going to give a bunch of federal land and say, hey, okay, that could be a good idea. He's going to make it leasehold. So he's going to give it to developers as a leasehold. Obviously, we know, Alex, like lending on leaseholds, if it is government, not too bad, but homes and condos don't appreciate on leasehold as the same way as a freehold.
Yeah, leaseholds are, from the financing side, it is more difficult. And typically, leasehold is essentially you don't own the land, and
you're renting. And
people don't really like that. It just doesn't appreciate. It'll give an opportunity for housing. That's good. It's just that it may not be as attractive, especially in the Vancouver area. We have a few big leaseholds like SFU, UBC, some areas in, I believe, Chilliwack, Abbotsford. There are areas in North Van as well. They don't typically appreciate as quickly as regular freehold or freehold strata.
Yeah, you get the intake from people saying, hey, I want to get this 3-bed, 2-bath condo. And you're like, oh, okay. You think, especially in the Vancouver area, you're talking about $1 million. You get the listing and it's like $450 and it's a leasehold. And it's how well run is that? What's the life on that leasehold? And it's, I don't think that is our thing to solve housing.
Yeah, it typically is has not a stigma to, people are less wanting to buy into that. Now, we kind of segue into another little bit. We talked about temporary foreign workers last pod, but I wanted to share this little bit that came in this week. Lululemon has threatened to stop its Vancouver expansion if it's not allowed to hire temporary foreign workers.
That is,
what do you think about that?
That's just, I think that's really sad. And that's like what our country has come to, of we're not doing our own things. We're just going to hire people out. And we just give everything away. Canada is the country of just giving away, not doing it in our own country.
It's almost like saying companies like that are saying, we will only hire in Canada or expand in Canada if you give us the same benefits of opening up a sweatshop in India or the Philippines or like a third world country where they take advantage of the cheap labor. And that's an example of what's wrong with our immigration policy. So not to beat a dead horse, we talked about it last week already. You know where we stand on it. But I just wanted to mention that. And of course, Lululemon, if they have a retail shop, normally they would hire youth to run the retail shops. It also exacerbates the youth unemployment problem, right?
So that's what we're seeing.
There you have it.
But
there you have it.
Talking about the bad news in the government, let's talk about the shining light of when our economy does bad. What could it mean for interest rates? And what are you seeing in the market that way there, Alex?
So I'm starting to see now the shift is going away from the 2 to 3 year fixed, where when rates were high in the last, as early as last year and a couple years ago, where we were getting people into 2, 3 year fixed to bridge the gap, to get people to the other side. Don't go with a 5 year fixed because it's too long. You're going to be stuck in year 4 and 5 when rates come down and you're at 6%. Exactly. So the conversation now has shifted to more variable. Even though variable is 1% higher than fixed, because of what we talked about, where the forecast is rates from the Bank of Canada perspective, rates are expected to come down 1.75% between now and the end of the year. So 15, 16 months away. Variable is more attractive now. Now, I say that because at the same time, variable is harder to qualify for. So you're qualifying for variable. Right now, variable is around 6%. And a short-term fixed is around high 4s, 5%. Let's just say a 1% difference. Now, if you wanted variable, you'd have to qualify at 8% versus a short-term fixed, you qualify at 7%. So there, for well-qualified borrowers, variable is definitely worth looking into. Now, I have a few clients who are borrowing right to the limit. They had to go with a 3-year fix because obviously for qualifying, but it is definitely worth the conversation now. So I would say strategy wise, variable is probably the way to go right now. And I
think it's just talking to people, finding the right lender. Like we know that there's different penalties with mortgages. We'll make a full episode, I think, on mortgage penalties because it's a pretty intense thing that banks and a lot of mortgage brokers don't even realize. But the benefits of the variable, you're just 3 months interest. You're always 3 months interest. Mm-hmm. With that fixed rate, there's 2 different types of penalties, and every lender calculates it differently. And that's where it's really making sure people, hey, we got to go to that 3-year fix because that's what you need for qualifying. But hey, yes, your rate's a little bit higher here than somewhere else, but your penalty is going to be substantially less. And that's where, again, it's just looking at the full picture, not of, I want that 4% interest rate on that 5-year term right now. It's what if that cost you $30,000 in 3 years?
Absolutely. The strategy for variable is take variable now, and sometime next year when we're going to see fixed rate, like 5-year fixed, down to 3.99 pretty soon, at least the insured rates. Maybe by spring, early next year, and then by the summer, conventional rates, we're going to see a 5-year, a three handle on it on a 5-year fixed. So at that point, if you're on variable, it might make sense to lock in then. Now, of course, it depends on your situation and everything, but the bond market, which governs fixed, usually front runs the Bank of Canada cuts. So if we're thinking that the Bank of Canada is going to finish cutting by the end of next year, the bottom of the bond market is probably around 3 to 6 months before that. So I would say between the summer and early fall is the period if you want to lock into a 5-year fixed. When we're all returning to 5-year fixed or 5-year variable, that's probably the sweet spot.
Yep.
Now, I could be completely wrong, but that's how history has played out when it comes to front running rates and such. So
yeah, and that's, you just go to everyone. You just have to look at all your options, make sure someone is showing you each scenario. The thing that even when variable rates were extra high, it was in like everyone's never going variable again. I show every option to someone so that they know it. You might walk into your bank, you might talk to someone, they're just going to offer one option. Just make sure that you're talking with your professional, seeing all the scenarios. That's the most important thing.
Yeah, and the important thing, just because one of your friends talk about it, it doesn't mean that same situation should be right for you. It depends on how long you plan to live on the property. Is it only a short-term thing where we're probably going to break in a couple of years because we're in a 1-bedroom right now? It's me and my girlfriend. We're going to get married soon. We want to start a family. We are going to break or we're going to upgrade. Those type of things. You got to look at where your life goals are and your plans are for the property. But
I'm excited for this new segment.
Is good news for rates. Yeah.
Exactly. I'm really excited about our next thing, the viewer mailbag. And we got a
Yes.
bunch of questions. Just so people know, we can't answer every question each time, but don't worry, we're going to keep the bank of them. Everyone that answered, your questions will be answered at some time. We just want to make sure that we can really go into detail for these ones.
All right. So do you want to read out the first question?
Yeah, let's do it. So this is one, and they got is that they work at a restaurant, they're a server, and it looks like they make most of their income comes in from tips. Now we know tips, a lot of people don't like to claim those, so it says I only claim a small portion of on my taxes. So my income on paper is low compared to what I actually would make. How do they actually qualify for a mortgage?
So how it works in Canada, or how we do with banks, is they look at your tax returns. Now, I grew up in hospitality, so I know when you work as a server, you don't have guaranteed hours. So they generally look at it at a 2-year history. And the 2-year history is the income that you make on paper. So it's your minimum wage, 2-year history of that. So on paper, you're probably making what, 30 grand a year or something like that.
Yep.
But
Yep.
and maybe some people claim like 10% of their tips. So 3 grand. Now we know you make more than that. You probably make more like 80 to 100, but you don't claim
Yep.
it. So it's the thing where you can't really have your cake and eat it too.
Yep.
But the bank only can qualify you based on what you claim on paper. Now, there is an opportunity. Now, okay, before I get into that, 33 grand is not going to qualify you for much. Maybe, geez, like 120 grand, 150 grand.
Ooh.
It's not going to buy you much in Vancouver or the GTA, that's for sure.
Nope.
Prices have gone up even more so. Could it buy you something in like Halifax or Manitoba? Yeah, maybe, but
Those areas.
yeah, you're living in those areas. So not to throw shade at Manitoba and Maritimes, guys, if you're listening, we love you. Okay. But here's a way to do it. We have lenders, alternative lenders. It's called B lenders, which they're more lenient when it comes to income, where you can't show income on paper. Now, as long as you deposit your tips into your bank account on a regular basis, those alternative lenders, B lenders, can use a 6 to 12 month average on average income that you deposit in your bank account. So let's say you make 6 or 7 grand a month in tips and your minimum wage. And if you can show 12 months of that, then you can qualify for a mortgage based on what you've, like your bank statement history. Now, the drawback of that, of a B lender, is because it's more lenient than the regular banks, you do have to put a little bit more down. Typically, it's 25% for a condo at least. And there are fees, lender broker fees of 2%, something like that. But
And then you have a
can
little
get
bit
a
of higher
mortgage.
in rates.
Yes, higher rates. You're looking at rates about, anywhere from 1% to 2% more, depending on your credit score. But it is possible. Unless you claim your entire income, for instance, 80,000, you're not going to qualify with the banks. And we usually compare this with, the comparison is, yes, you are paying more with a B lender. Sure, you're paying 1% more, but that 1% more on the interest cost far exceeds the income tax you would have paid if you claimed 100% of your tips. Like instead of 33 grand, you claim 80,000 of your tips, like everything. And you're paying, what's a tax rate for 80,000? You're probably paying
You'd be at like 30, 35%.
yeah, like you're paying 30,000 in taxes. So maybe you're paying maybe 10 more thousand in mortgage interest, but
save 20,000.
you're paying, you save 20,000 in income tax paid. So that's the short answer. That's the long answer. If you make cash income, provided you deposit the money into your bank account, yes, you can do it, but through alternative lenders. Now, the same can be said in other industries where there's a lot of cash income involved, provided you deposit
Self-employed.
the money. Exactly.
Self-employed contractors, like it is my favorite thing to sit with someone and say, hey, you've been claiming like less on your income, but guess what? You're going to qualify and you're actually going to save a shit ton of like taxes. And it's the nicest thing to see them. I want to talk about the alternative B. A lot of people are like, oh my God, you're putting me into a private lender. They get scared. They don't understand there's There are different types of lending in Canada. I don't want to dive into it. A B lender, they're funded by the banks. They're just a more forgiving. We've made it so hard to qualify for mortgages. Banks used to be able to do this. The government has just taken it away. They don't want them to lend on the risky. And it's now, hey, this is where people do it. And I'm talking like probably 40 to 50% of the people I deal with we're morally dealing with these type of mortgages, and it saves them a lot of money.
Exactly. I have a similar situation where I have a general contractor client where, business for self, they write down their income because they want to save on taxes, right? And I like to say this to clients who are self-employed, and it's very similar to restaurant servers. Great for taxes, not so good when it comes to borrowing. So you can't really have your cake and eat it too. But I was able to help my client buy 2 properties, both with B lending, but he was able to get the properties. And I showed him it's better to do it that way and claim the way you claim to not pay as much tax versus claiming more just to qualify for 1% lower on a bank.
Yeah,
right?
do it
And
for
he
2
was able
years just to qualify,
exactly,
and then have
exactly.
to pay all the taxes.
Exactly. So he ended up, we were able to help him qualify for 2 properties, and he loves me to death. So anytime I need any work, he said he'll do it at cost.
At cost, yeah. The one thing I always hear from them, they're like, "Oh my God, my accountant screwed me." It's no, like your accountant's job is to save you on taxes. That's what their job is. It's just making sure, like to me, having your professional mortgage bank work with your accountant to make sure you have a plan. If you're trying to buy a house in the next year or two, like sitting down, figuring out what does that look like? And that's where it's making a team aspect to say, hey, this is the option for us to go to the A lender. You're going to have to pay $40,000 in taxes. Or, hey, we have this option right over here. You save $40,000 in taxes. And that's exactly. It's a great thing to be able to show people.
Yeah. Yeah. It's almost like you're saving, instead of paying $40,000 in taxes, you're paying 10 more thousand in interest. And you don't have to pay the $40,000 in tax, so you're saving $30,000. You just have to be okay with not getting the best bank rate. You just have to. You might pay 1% more forevermore, but it allows you to be in this property. It's just the way it is. All right, let's move on to the next question here. All right, I own a home with a mortgage and a home equity line of credit. Can I use these funds to purchase another property, or do the banks frown upon that?
This is a good one because everyone always is, oh, I have equity in my house, but I can't do anything with it. They think they're not allowed to use it. And there's a difference of a home equity line of credit and an unsecured line of credit. An unsecured line of credit, you can't go and use as a down payment. The banks don't like that because it's not secured to an asset. There is lenders that will do it, but if you have the right amount of equity, let's just use easy math here. Let's say they got $1 million house. It's worth $1 million. They have a $500,000 mortgage. If they qualify up to it, they can get access to $800,000. You got to minus your $500K mortgage, but they still have $300,000 of equity that they can actually use. We have to qualify for them, but they can use as a down payment on a next purchase, an investment property. It's a really great way for people to get into that next property. And they can even do this if maybe they don't want to sell today, but they know that they're going to sell in the future. It's, hey, you get to do it now. You get to buy right now, and then you get to sell later. Again, it's just helping people map that out. And I get the question all the time of saying, oh, I can't do that. The bank said they wouldn't qualify me. And it's, no, did they sit down and show you how it actually works? And it's a great tool. I try and put everyone into a home equity line of credit when they get their mortgage. So every time they pay their mortgage down, they get access to that equity. It's an emergency fund. You shouldn't be using it just to go like fund your life, but it's there in case your roof breaks, if you got to go do something. It's, to me, one of the best things ever.
I do agree with you that HELOC is what we call it for short, should not be used as an ATM to fund your lifestyle. If you're going to use it for emergency or investment purposes, so you're paying anywhere from prime to prime plus half on it. So if you are using it to invest, make sure you will earn a return that is more than what you're paying in interest. It could be if you're investing in the markets with stock investments and other things like that, or what a lot of people do is they do it for real estate.
Yeah, and that's where we know there's a lot of people that did that in 2021, and now that variable rates, which are tied to a HELOC, those rates went up, and people obviously their rent wasn't covering it. So again, it has to be something that's planned and discussed with your professional to say, hey, this is what your payments are going to look like, and not just, hey, here you go, here's free money. A lot of people think of, oh, I got 300,000, it's my money to use. It does come with a cost.
Yeah, you're borrowing it and you still have to pay at least the interest on it. You can write it off because you're using it for investment purposes, but you still got to pay it.
Yeah.
I think we got time for one more question.
Yeah, let's do it. Let's do one more.
Okay, so let's read this last one here. I have a low interest rate at 1.5% right now. What happens when my mortgage comes up for renewal? Is my payment going to triple based on the new interest rates? And do I have to qualify again?
I have an interest rate at 1.5% on a property. It's up in 2 years. It's a nice low one. It's funny, the doubling and tripling. People think, if let's just take 2%, if your interest rate goes from 2 to 4, people think the math is your payment would double. If you had a $2,000 a month of payment, they think that their payment would actually go to $4,000. That's not the math at all. It's going to depend on your amortization, what you have remaining. And I'll let you dive into that a little bit here of what that looks like, Alex.
What we've seen some examples is if your rate goes from 2 to 4%, your payment would probably jump around, depending on what your mortgage size is, probably jump like $700 or $800 a month. So that's nothing to sneeze at, but it is going to go up, but not double.
Yeah.
One thing to help with the soft landing, so to speak, is when you're up for renewal, you can always ask your bank to stretch your amortization back out to 30 years to help soften the blow. And this is what we're hoping for too, that by the time people renew, there's a big renewal cliff in 2025 and 26 where a large majority of people are renewing. Alex, you're going to renew. I'm renewing 26 as well because all of us took out mortgages, we refinanced. We took advantage of low rates, right? Because why the hell not? It's 1.5%. But time to pay the piper soon, like I said before. So there are things, the hope is that for us, all of us who are on variable or caught or even a fixed, we hope that rates will be returning to the pre-COVID number of 3.5% to 4%. Yep. So that what it looked like during COVID or last couple of years at 6% will be softened in the 3.5% to 4% range. And we'll be able to stretch out our amortization to back to 30 years to soften the blow.
And that's that's why the Bank of Canada and the government are like, they know that rates need to come down because there is so many people that do have those $1 million mortgages at the 1.5%. They are going to sting. Like there is no doubt about that. Like it is going to hurt your payment, but there's ways to figure it out. And how do you qualify again? As long as you've paid your mortgage on time, you haven't had any credit issues, you're going to be able to sign with your current lender. It's not like you now have to go and qualify for that mortgage again. I think a lot of people get scared and they're like, oh my God, maybe your job changed. Maybe you're not working as much right now. You don't have to worry. In a sense, you'll be able to get that mortgage. It's just going to be what that lender offers you, meaning you're not going to be able to go anywhere else.
Perfect. That was a good segment. I think a lot of viewers are going to enjoy that. I think we're coming to the end of our episode. So that was good.
Yeah, I like it. It was a good one. We got into the politics. We haven't been canceled yet, so hopefully we don't get canceled here either.
Sounds good. Okay, on behalf of my co-host Alex Shanks, I'm Alex Pang. Thanks for tuning in, and we'll see you on the next episode.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.